What is happening, everybody? Welcome to Mentorship Monday. My name is Matt. My company is called the DeRosa Group. Welcome to our Mentorship Monday program. And like I said, my name is Matt. Mentorship Monday works like this. There's a lot of people out there that want just to pick a real estate brain, that want to get some real estate advice, that want to talk out a real estate problem or a real estate conundrum that they're facing, or just get some real estate guidance, whatever that looks like. All you got to do is you send an email to helpme@derosagroup.com. That is helpme@derosagroup.com, and we'll take your real estate question. We'll bring you on live right here onto the program, and we'll answer your question. We'll chat for a little bit. I got my co-host, Justin Frazier. Come on in, Justin, and say hi to everybody.
Hey, everybody. What's happening?
What's up, man? How's it going?
Happy Monday. This week, we've got a very special guest, Mr. Chris Giannino. Chris, what's up, man?
Hey, what's going on?
What's up,
guys?
Chris?
How are
What's
you?
up?
How you doing, man?
Chris, I know you're already in Insiders.
Yeah.
And honestly, little plug for you guys right here. I've been in it for about a month now, Insiders, and I've learned so much. So, I think it's totally worth the value. So, one, thank you guys for doing this because we have access to see stuff that I wouldn't see. So, thanks for that. And I look forward to it.
Thanks,
hey, man.
Chris.
You're welcome.
Awesome. We did not pay or ask Chris to do that.
That was yeah. What's on your mind?
Basically, eventually I want to get into buying an apartment complex similar to you. I'm in the learning process right now. And I wanted to see for you, what was the pivotal point where you're like, you know what, I'm just going to go do it? Was it a certain amount of units? Was it, the type of deals you were doing? What was that moment for you?
We were not one of these folks that just took a weekend course on hey, pay me $5,000 and I'll teach you how to buy apartment complexes. We never did that. We just scaled through it and started small, owned a couple of 4 families, slowly bought more 4 families down the block on that one, bought a few things in around Trenton. And then eventually my next stretch from multifamily after buying a couple of 4 families was a 10 unit. And that was, that felt like, it felt like buying a hotel. It was a big stretch. Got my head around that, thought about it, got it good. Then we bought an 18 unit. Okay. So from there we bought a 49 unit, and from there we bought a 198 unit. We slowly scaled in to multi, and that's what I recommend that you do. So it's not as sexy to be like, hey, I'm going to go buy a, 5-unit apartment building. Look at me. Right. Mm-hmm. But I can tell you that there's a lot that 5 units going to teach you, and you can probably own more of it, and you can probably make plenty of money. I made plenty of money on my 5 units, my 10 units, my, all those properties, so you actually have to give a lot more ownership away, the bigger units. So more units doesn't necessarily mean more money either, mind you. That's a whole nother rabbit hole we can go down. What did it for me, as I got more comfortable with the systems and processes that we would use to manage those things, and as I got more comfortable with our knowledge of tenant management, because I was managing it all myself, as I became more present and aware of those things, I just got more comfort level, and I was willing to stretch myself a little bit beyond my comfort level. That's what did it. But I think that systems, processes, understanding the rules and regs, and understanding how to manage something a little bit bigger than something a little bit bigger than something a little bit bigger is what did it for me. It wasn't like this light that went off that was like, oh, Matt, you need to go out and buy 200-unit apartment buildings, and this is how you do it. We grew into it, unlike a lot of the other folks that are out there.
Okay.
Unlike Justin, who bought a single-family home, then he got hit in the head with a lightning bolt and went out and bought a 40-unit.
I had 3. I had 3 single-family homes.
Yeah. Well, what would you say? I don't know if what I said resonates with you, Justin, but what you don't have to tell, what would be your thoughts on, epiphanies, mindsets, whatever it is, to go from where you went to 40 units?
I'm very how driven. And so if you have a strong how, meaning you've got experience in construction or something that you can bring to the table that can help you, skip a few steps, then I don't think that's terrible, right? If you've got a mentor that can help you out, like I had with this guy over here.
Troublemaker over here. Yeah. I got into it.
There are ways, I think if you're, the advice Matt gave is absolutely 100% a great way to go for most people, because it helps you figure out what you're good at, what you're not good at, how to raise money, how to do deals, how to, maybe partner with someone on that 5-unit or 10-unit and sort of grow and expand from there. Maybe you start to bring in property managers and you learn how to manage managers and all that. For me, I came from the angle of, I've got some real estate experience. I love it. Let me join a team. and I came in as a team member where, well, I did my syndication and brought Matt on, and then I realized like, oh, let's be part of a team. So now I don't have the burden of finding deals or raising the money. I just focus on what I'm good at, which is the asset management. And I'm part of a bigger group doing a lot of big deals. So everyone has their own path, and there's no real wrong answer. I mean, I would say the wrong answer is if you have no experience, no credibility, no contacts, nobody that can help you, and you're like, I'm going to go buy a $100,000 property with no experience and no money. You're probably going to have a pretty hard time.
Irresponsible.
Exactly. Yeah. But if you have some kind of track, whether it is business, like your day job.
I don't care who paid. I don't care what weekend course you went to,
right,
to teach you how to do that deal. That 100-unit apartment building is going to kick your butt, man.
Right.
You know?
Exactly.
Yeah.
And so definitely. So as far as like the mindset shift though, Chris, honestly, for me, it was Matt. I was hosting a meeting, and Matt was our featured speaker that night, and he was speaking about his 49-unit deal. And I was like struggling to find property number 4.
I remember that deal. I remember that meeting. At the Mexican place up on Route 1. Yeah.
I hosted you that night, and you came, and we had a packed house. And
I know.
And normally, like, the speaker will come in. I'm not really, but like I was listening. I'm like, you know what? I don't need to go spend all this time and effort on finding house number 4. Let me go. Why not bring in a 20-unit or 50-unit or something at much larger scale? That's what worked for me and my skill set. And I figured out the how and the pieces to go do it. But sometimes all it takes is that lightning bolt of inspiration to figure out like, oh yeah, if this guy can do it, I could probably figure it out too.
I say that all the time, man. If I can make this thing work, y'all can too. Yeah. So there's 2 different ways you can do it. You can scale up, like I said, which is what I did. Or you can do what Justin did, which is join a team. And I tell people that all the time. The way you get into multi is one of those 2 ways. You can, and the scale up thing, a good goal is to double your portfolio every time you do a deal. And it sounds like not that much, but that exponential scales really fast. So just every time you do a deal, double up. If you got 4 units, buy 4 more, you have 8. Then buy 8 more, you have 16. Then buy 16. If you have a rough goal to scale up, and I've coached a few people through that process, and they scaled up quickly, and they're sitting on a lot of units now just because they just slowly scaled as they went. Adrian
has a follow-up for you.
Yeah, that's a good question, because Adrian was asking like, okay, Matt, so did you go and buy a couple of 4 families, lever those up, and then go buy more, and then lever those up and then go buy more? No, we still own a lot of the small multi that we did. I rarely sell. I'm a buy and hold it as long as I can kind of guy. We ended up just attracting more equity, partly because of the book, raising private capital, partly just because we've been around for a while. So we started to attract more and more capital. So it enabled me to get into larger deals. And as we build systems and built teams, that enabled us to buy more properties. I've sold some stuff, but mainly we've just acquired more. And I still own things that I bought north of 10 years ago. And I bought most, and Cedra and Real Estate said I bought most of my stuff local. I believe in buying small local, buying big remote. That's my 2 cents on that. I mean, if you're going to buy a duplex, I would be nervous buying a duplex that's a couple 1,000 miles away from my house.
I agree.
But if you can find a duplex in your backyard or close to a half an hour from you, great. I know people in California can't do that as well, but if you can, buy small local, buy big remote.
So Chris, your second question.
So with COVID happening and, everyone kind of working from home and, a lot of new normals, like employers are pushing the work from home indefinitely. Do you kind of think like the Southern and Midwest markets might have a nice uptick in appreciation because people might move from like New York City and all these expensive areas to more affordable areas since they could work remotely?
I have a lot of opinions on that. That's interesting. It depends on the industry. Not every industry allows for working remote. I got a buddy who's an assistant plant manager at a property at a factory down in Virginia, a guy I went to college with. He ain't working remote. I mean, because the factory's not going to run itself. So not everyone can work remote. America is still going to need to go to jobs, go to work. We're not going to become this autonomous society that we're all going to get to not have offices at all. That said, I believe real estate that's been around like tech hubs and, areas like San Francisco, whatever, that real estate may become less attractive because those companies may not require their employees to live in those markets anymore. They might allow them to telecommute in that. It has to do with the age group of the tenant, because some folks would want to just like, okay, if I work in Manhattan and my boss says I no longer have to be there every day, well, maybe I can move to South Jersey and just commute in once a week for a day and I'll deal with that in exchange for working from home the other 4 days, and I can live close enough that I can commute in. So that industry may yield that. But then you've also got other industries. Like one of my investors is a computer programmer, and he lives in DC because living in DC allows him to not have a car. He's an urbanite, so allows him to be in an urban environment or whatever. And the tech company he works for is out in California, and he's a software programmer, and he just puts in the hours, does his programming. So you will see more of that. I would shudder to bet about where they're going to pick, because there's a lot of options. There's the mountains. It has to do with personal preference, right? So if it were me, I'd be living maybe at the beach or maybe in the mountains or whatever, right? But that's me. There's also super desirable areas that are already overpriced or that are already high. So it's not like people say, oh, geez, now I get to live, in a high rise in Miami because I can telecommute. Well, that's already a top dollar market. I think that what you'll see with more broadly in telecommuting is the areas that are a little more remote to the big cities, like let's say look like an hour and a half outside of San Francisco, and that maybe you can live there and go into the city once a week or something like that. That's maybe where I would look for a boom versus betting on, around you and me, the Poconos becoming more popular. I don't know. It really has to do with personal preference. Does that make sense? Super long-winded answer to your question.
I agree with everything Matt said. I do think that there is going to be more work from home, and it's not just going to be tech in San Francisco. You're going to start to see, I think, sales jobs can be outsourced, and there's anywhere in that maybe could work from home once a week, once every few weeks before. It might become the new normal to work from home 4 days a week, 5 days a week, and go. You're only really going in the office to like pick up any physical mail and like check in with a meeting with the CEO or something. Like there's not going to be as many needs for it because everyone had to adjust so quickly to working from home that it's that transition period that might have taken 5 years, I think, is accelerated to 2 months, and it's not going to be unusual for people to call in. What will be unusual, though, will be if there is, an 8-person meeting and 7 people are sitting in the one room and the one guy's home and everyone knows he's like just down the road, right? So that might cause a little, but if everyone sort of leaves,
he's still in his pajamas.
Right. Right. But then there's also like sales state income tax to factor in as well. And so if you're in a high tax state, you might, if you can get away with it, you might want to move to a low or no income tax state. And
personally, that's what I think you might see more of. If I had to break out my crystal ball a little bit more, Chris, I would say that you may see people look at this whole thing as permission to finally move out of high income tax states or high real estate tax states. Example, New York, New Jersey versus Pennsylvania, or New Jersey versus, Delaware has other benefits and stuff like that. I think it has high income tax, but anyway, look at states where there's a disparity in tax base. I've heard California versus Utah, in that I know very little about it, but there's disparity among state borders. And so if you see that, look for maybe a shift across state lines. Adrian wants to know thoughts on Northeast Newark. I know very little about that area. Justin, you may know more about North Jersey. My only thoughts on Newark in general is some people joke that it's the 6th borough because it's kind of becoming another commuter area into New York City. So I think anywhere in North Jersey, Adrian, is becoming more of a thing for people to shoot into the city. So that's my 2 cents. Although I don't know regions of Newark or the outskirts of Newark. Unless if you guys do, you can hop in.
I know that Newark is very neighborhood specific. And so there's, from what I've heard from other investors, is you could cross the street and be in a very different type of neighborhood than you were on the other side of the street. And so if you're going to invest in Newark, you have to know the area. And that goes with any town, right? I'm 30 minutes away from Newark. I would not invest in Newark right now because I do not know the area. And that's not any commentary on growth or cash flow or appreciation. I just don't know it, so I can't invest there right now. So if you're going to invest in Newark, learn it. Learn the neighborhoods, learn the areas, learn the streets, learn the economic factors, learn the policies, the economic development plans. Look into the proposals for 21 and 22 and where's the city spending money? Where are they trying to improve neighborhoods? Like all that you've got to, that's where you got to come in and do the legwork. And that goes for any town across the country.
Words of wisdom, man. When I first started investing in Trenton, that's what I did. Everything Justin just said. I called up the Department of Housing and Economic Development for the city, met with the zoning officer. Those folks, public, that's the public servants. Their job is to meet with people that want to do work in their town. So they were happy to help me, And so, we know this developer's doing this work here, and this is going to be an opportunity zone, or this area over here. A big developer is going to come in and do a bunch of work, and they're not going to be like, this neighborhood over here is really sad. They're going to kind of sell you on why Newark's amazing, as they might not tell you where the bad neighborhoods are, but they'll definitely show you where opportunities are. So, Adrian, thank you. Help me at DeRosaGroup.com. Adrian, fire off that email. I want to see your pearly whites, your shining face right here on this show with me and Justin next week.
So Adrian, we'll see you next week.
I got your word, man.
But for this week, Chris, I want to thank you for some really, really great questions here, and getting into multifamily, and then of course COVID is on everybody's mind, and how that's going to affect everything.
Absolutely. Thank you guys very much. Have a good one.
Thanks, Chris.
Good stuff, Justin. This is good stuff. I'm really enjoying these Mentorship Mondays. Just fire us some questions so you can join us live next time. Send a text message with the word DeRosa to 66866, or just go to DeRosaGroup.com/insiders. You got a half an hour to join us. Justin and I are gonna tear up this deal and make a go no go decision on a 300 unit. I can't wait. A lot of great stuff's gonna come out of that conversation.
Yeah. All right. Thanks, everyone.
Thanks for watching, guys, and have a great and profitable week.